Morning, and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Happy Friday, Hiral.
Wish you the same, Alex, and a very good morning.
Good morning. Well, it ended up being a bit of a somber close to the July series for the equity markets with a tumble in the benchmark indices. But all told, it's been a great series.
Absolutely, a good series, and a lot of sector rotation is what you've seen, during the July series, and it's going to be interesting how August pans out because now consolidation is on the cards, right? And that's what the markets are aiming for. If you see last 2 to 3 trading sessions, it's the pharma space which has taken center stage, and what analysts are expecting as well now is that it will be pharma that will be one of the gainers in terms of the August series as well.
We're going to talk about two names from that space as well, but it'll be interesting to see whether the banking index comes out of some of that lull that it has crept into and really leads the charge now towards that 20,000 mark, which we're still talking about a week later. In fact, last Thursday was when we really made that push, and we've had a little bit of a stumble since that point.
Absolutely, because then if you see in terms of the last 4 series, they have been absolutely on the positive side, right? So now there is that little bit of cooling off that will happen in the month of August, and that's usually the trend as well that we've seen. If you see in terms of the rollover data as well, specifically in terms of Bank Nifty, this month we've stood at around 77.4% versus a 79% last month, right? So there is a slight bit of a wobble that we are seeing on that front. Moving on, if you see in terms of stocks, it's Tech Mahindra, Axis, Bajaj Finance, they have led the losses as well along with the M&M. And you had Cipla and Dr. Reddy's, which actually took charge in yesterday's session. Moving on, if you go to see the kind of weakness that we saw in the markets yesterday as well, clearly what analysts are also indicating is that, yes, the markets are moving into that overbought territory. And that's one of the reasons where we are seeing profit booking at higher levels so far. If you see in terms of the FIs as well, as you had highlighted it earlier as well, they've continued to now start remain sellers, and it's the DIIs who've started to come in. So the entire economics of the markets is shifting slightly. Where it takes us to is what we need to wait and watch.
And that global scenario is also changing. That the landscape might just be changing. If you haven't seen it, just pay attention to this headline in Japan, where the central bank is allowing the long-term yields to go above that 0.5, or at least contemplating allowing it to go above that 0.5% mark. Ostensibly, this means that they're a little worried about inflation, and so they're encouraging people to put money in to long-term savings, which could have a bearing on consumption as well as on inflation. So that's likely to have a bearing on the global stage. But let's focus in on a few very key stocks that you want to watch out for, and that's the purpose of the show as well. Varsha is joining in to tell us about a few stocks she's picked up on the earnings front. Morning, Varsha. What are you looking at?
Good morning, guys. So we've got a bunch of companies that one needs to look out for. The first one is Indian Hotels. Now the revenues were up 16%, which beat estimates. Now the analysts were expecting, a jump of 13% in its revenue or year-on-year basis, but the revenues were up 16%. Now, the company has signed almost 11 and opened 5 new hotels across brands. The outlook for the upcoming quarters remains really strong, with pace of demand driven by domestic consumption momentum, global events, and revival of international arrivals. The next company that we have is Indus Tower. Now the revenues were up 2.58%, while the EBITDA was up 51%. Margins were at 49.65%. Now, with the 5G rollouts by operators, Indus is also keeping pace to capture the growth. But there's one problem here. If you see the Indus trade receivables for the June quarter have risen to almost 5,303 crores from 4,868 crores. Now, this is due to the Vodafone, which is having financial difficulties. Now, the health of this loss-making company, that is Vodafone, is actually important for Indus long-term financial stability, since this Vodafone is a key customer for Indus Tower. The next company that we have is Home First Finance. Now the net profit was up 34.9%, while the net income Then GNPA was at 1.64%, while NNPA at 1.14%. Now, the disbursement for the quarter stood at 895 crore, clocking almost 35% growth. Now, the management said that the increase in disbursement was the reason that helped total AUM to grow significantly. The next company that we have is Acelia Solutions. Now, the revenues were up 2.5%, while net profit was down 11.6% at 32 crore versus 36 crore quarter-on-quarter basis. And EBIT was up 11.8%, while margins were at 33.26%. Now, this company provides solution software services to airline companies and the travel companies. The next company that we have is Intellect Design Arena. Now, the revenues were up 3.8%, while net profit was up 2.7% at 93 crore. EBIT was up 9.5%, while EBIT margins were at 17.8% versus 16.8%. Now, there are a number of deals that this company has done which will actually help this company to pace up the growth. The last company that we have is Sona BLW. Now, the revenues were up 25.17%, while EBITDA was up 47%. Net profit was up 47%. Now, this company is actually growing really fast when it comes to EVs. Also, so the net order book for this company stands at 22,000 crore, of which EV contributed almost 78%. So,
so significant.
Significant, yeah.
So that's going to be an interesting mix that we should be watching out for. Thanks, Varsha, for getting us all the details as well. So that's the first part of the earnings that we are watching out for in today's session. Alex, Mika is going to come by to give us a couple of more companies that she's been tracking as well. Good morning, Mika. And which are the stocks that you've been looking at from an earnings perspective?
So first we have NDTV that recorded a 4.5% growth quarter-on-quarter revenue to around 70 crores. However, the company's EBITDA loss stood at 9.49 crores as compared to 14.8 crores last quarter. And the company's net loss stood at 8.08 crores this year versus 1.08 crores net loss last quarter. Next, we have Ajanta Pharma. The company's earnings met and crossed the Bloomberg estimates. The company recorded a 7% year-on-year revenue growth at 1,021 crores and a 19% net profit increase to 208 crores. The board of directors also approved its first interim dividend of 315 crores for the year for the financial year 2024. Then we have Shyam Metallics and Energy, which crossed and met the Bloomberg estimates in terms of absolute revenue, EBITDA, and net profit numbers. However, the company's profit was down by 42.7% this year and declined by 33.62% this quarter as compared to the year before period. The EBITDA margin stood at 12.24% versus the 18.82% last year. JK Lakshmi, next we have JK Lakshmi Cements, which missed the Bloomberg estimates at the revenue and net profit levels. Net profit, EBITDA, and EBITDA margin saw a decline this quarter compared to the year ago period. However, revenue saw 4.6% growth, and the sales volume this quarter stood at 32.05 lakh tons as compared to 30.32 at the 30.32 level last year. The company also achieved a cement capacity utilization of 85% this quarter and a clinker capacity utilization of 97% this quarter. Next, we have Bharat Electronics, which crossed the Bloomberg estimates in terms of revenue, EBITDA, and net profit. The company recorded a 12.48% revenue growth to 3,533 crores and a 47.2% net profit growth at 539 crores. The EBITDA margins also improved this quarter at 19.04%. And lastly, we have Blue Dart Express, which reported a 4.31% revenue decline and a 48.41% profit degrowth at 61.28 crores. EBITDA was also down 28.64%, and the margins declined to 15.40% compared to the 20.66% in a year ago period.
All right, thanks so much, Mihika, for that. For me, the key takeaway Hiral would be Bharat Electronics, which is a very strong set of numbers. And this is, of course, a stock that is from a pack that has done incredibly well in the year to date so far, and it has gained quite substantially as well.
We'll be speaking with the management tomorrow as well to understand more.
So there you have it. And by the way, in case you missed any of those numbers, because understandably the flood of the earnings season has really caught up with us as we head into the last couple of weeks of the earnings season for this quarter, just have a look at the website pqprime.com. You'll find all of this information. You can peruse it at length. For now, let's turn to another sector that seems to be doing quite well operationally, and that's the cement space. ACC is the counter that we're focusing on. And in the first quarter, I believe that it is posted results that are ahead of consensus estimates on the back of the volume number, which for other companies also has been quite good. Rishi is joining in to tell us what the perspective is from the brokerages as well. Rishi, morning.
Good morning.
Was what I was saying correct?
Yeah, absolutely. Like volume growth was what drove the profitability. But if you also look at brokerages, they also feel that the numbers were really good. In fact, MK has increased the target estimate by 12%, and Citi has increased the target estimate by 9% to over 2,300 rupees per share. This implies a 18 to 20% upside from yesterday's closing. MK, in fact, also increased the EPS estimates by 2% for this financial year and 9% for the next financial year. Now, the profits, they doubled on higher volumes as well as lower costs. Now, the cement business was what drove its profitability. It had 130% growth in its profit before tax. And even within the cement business, it was the blended cements that contributed to much higher volumes and higher EBITDA per ton. But although the realizations at the overall level of the company were much lower, and this was because of the global situation as well as domestically, where the cement prices as well as other commodity prices have been a bit suppressed. Now, if you also look at the cost from the cost angle, the raw material costs were much lower. So this partially offset the lower realizations. So the total cost per ton, it also benefited from the lower cost, and the kiln cost were lower by 15%. The volume growth that I mentioned earlier, it grew by 23%, and it was majorly driven by a supply agreement that is there with its parent company, that is Ambuja Cements. So overall, I feel good numbers, and even brokerages are positive on this, and the stock may continue to see some action that it missed yesterday.
Thanks, Rishi, for getting us the details. It's going to be interesting to see how ACC reacts in trade today on the back of brokerages. But moving on, apart from the companies that reacted to or that will react to numbers, a lot of other companies that are newsmakers of the day, and we will have our colleagues also join in. One sector that we've been talking about so far is the pharma pack, right? Clearly, a lot of action yesterday's session as well. You did see the kind of contribution that Cipla as well as Dr. Reddy's gave us in terms of trades. In fact, Cipla was the one which was locked in upper circuit as well. In fact, Monal is joining us with more details in terms of what's in store for the sector and which are the newsmakers from there. Good morning, Monal.
Good morning, Hiral. There's a lot of commentary around how the US business could be recovering, which is why the sector's showing quite the results that it is, with both Dr. Reddy's and Cipla posting a really positive performance on the North America front. Now, we have two more names that have been that have shown some action in the evening. That's late evening, so there should be some impact today. We have Ipca Laboratories. Now, the Competition Commission of India has finally approved Ipca's move to acquire around 59% stake in Unichem Laboratories. So, if you remember, we'd spoken about this before in our earlier show as well. It was somewhere in April where Ipca had proposed an acquisition of 33%, post which, because it's acquiring 33% of Unichem at 440 rupees per share, it would also be required to make an open offer for the remaining 26%. So overall, it's expending 2.4 crore. So it's getting 2.4 crore shares for 440. So it's spending 1,000 crores on the direct acquisition, and the open offer would cost it around 805 crores. Let's see what the reaction is. Also, we have Lupin, which came out with a disclosure last evening saying its Goa and Pithampur facilities have now been resolved by the US FDA. Mind you, there's no typical upside here because these clearances came in the past. The Goa facility received its clearance in December 21, while the Pithampur Unit 2 facility has received a clearance in July earlier. So there's no typical upside. The main thing to watch here is how does the company perform on Spiriva, for which it has already received an approval. Today, I don't believe there should be any reaction to this news. It's just sort of a disclosure.
Thanks so much for that, Monal, and for that perspective. Certainly the stock as well as the pack, you should watch out for both of them in trade today. Cipla, as Hiral pointed out, was the top gainer yesterday and moved quite substantially. There are several other stocks that are in the news as usual, and Himansh is joining in to give you some perspective on that. Himansh, what are you picking up?
Right.
Morning.
So, good morning, Alex. So, besides IHCL declaring Indian Hotels Company Limited declaring their financial results for the quarter, the board also approved provided an in-principle approval for the acquisition of Pamodzi Hotels, which is currently a listed entity in Zambia. The acquisition is valued at $15 million, and the term sheet for this is valid for 18 months. Presently, 19% of Pamodzi Hotels is owned by Tata International Singapore, and the transaction is subject to Tata International Singapore, acquiring the balance 10% equity in the company through a delisting process in Zambia. Indian Hotels will then complete this acquisition in 3 tranches. Additionally, the board also approved a plan for lease agreement for a proposed hotel in Frankfurt, Germany. For this, they will first have to set up a new wholly owned subsidiary in Germany to undertake this agreement. And the envisaged capex for this is around 5 million euros, and they'll be going forward in the next coming months. So JK Lakshmi Cement next, the board of directors approved acquisition of Hydrive Developers for 16.33 crore rupees. The acquisition is to be done at an arm's length basis, so it's a related party transaction. The objective behind this acquisition is that Hydrive Developers owns a chunk of land next to their grinding unit in Surat. It measures roughly around 57,000 square meters, and this can be conveniently combined with the grinding unit to expand their facilities. Additionally, the board also approved fundraising of 22,500 odd crores through term loans and debt securities for financing ongoing operations and expansion. Lastly, we have Welspun Industries. The board approved acquisition of a controlling stake in Michigan Engineers, which is a tech-based engineering and construction company focusing on water infrastructure. So this is in line with Welspun Industries, their plan to grow in the water infrastructure business segment and enable their entry into the tunneling business. They've already signed a share purchase agreement for this, and the approximate cost for this is valued at 137 crores for 50.10% stake in the business, and it's expected to be complete in 4 weeks. So
Thanks so
those
much
are the stocks
for
I'm
getting
tracking.
us the details. And for me, Indian Hotels does stand out. One
Right.
is on the back of earnings and on the acquisition, and it's the hotel space, which has absolutely been in focus as well, taking into consideration the kind of occupancy rates, as well as if you talk about the room rates as well, the tariffs have been absolutely on an increase. So watch out for this space pretty closely. But there is another list of stocks that we should be watching out for as well, which is an extension to what Himansh already got for us. Saloni has been looking at a few of them. Saloni, good morning. Which are the stocks that you've been tracking?
Good morning. So first we've got Adani Enterprises. So the subsidiary of the company, that is Adani New Industries, has raised a trade finance facility of rupees 3,231 crore from Barclays PLC and Deutsche Bank. The finance was raised for securing working capital requirements of its integrated solar module manufacturing facility. So the subsidiary is currently building an ecosystem of one of the biggest integrated green hydrogen businesses, including solar modules and wind turbine manufacturing. Next, we've got NACL, which has approved a proposal to foray into specialty materials and intermediates, special nutrition, and bioproducts. So the company has considered an investment of rupees 1,000 crore over the next 3 years for the business. This includes finance for expansion needs of the company for its existing manufacturing and R&D facilities, for captive as well as custom development and contract manufacturing opportunities. And lastly, we've got an update on Rail Vikas Nigam's offer for sale, which went live yesterday. So the base offer of 7.08 crore shares, representing 3.4% of the total paid up equity capital of the company. So the government wishes to exercise an oversubscription option to the extent of 4.08 crore shares, representing 1.96% of the total paid up equity share capital of the company in addition to the base offer. Post the oversubscription, the total offer size will be up to 11.17 crore shares, representing 5.36% of the total paid up share capital of the company.
All right, there you have it. Thank you so much, Saloni, for those updates. And we've had an exhaustive list of stocks that we've talked about today, understandably so, because of the earnings
And,
season.
and one more stock that I would not want to miss out today is M&M.
Yeah.
Because, we did see some cuts in the start of the day on the back of the acquisition that they've made in RBL. But what was interesting to see, Alex, was the cuts deepened further in the last hour of trade, right? So there is some to and fro happening, whether the investors are happy, specifically taking the capital allocation policy into consideration, because last what we had heard was that they will continue to invest in non-core assets where they have a return on equity of or investments of at least in terms of 18% or more. Now, where RBL fits into their strategy is something we need to wait and watch, and what happens to the stock in today's session.
And of course, you have to remember regulatorily, as was being pointed out by our colleague Vishwanath Nair, they will need RBI approval if they do need to take their stake above 5% in RBL Bank. Of course, they've said very clearly that they won't be taking it above 9.99% because they very much can't. The Reserve Bank of India will not allow them to do that as things stand right now. But of course, Hiral is going to be doing a deep dive on M&M, so watch out for that either later today or over the course of the weekend. You'll be able to read that on bqprime.com. For now, that's a wrap on this edition of Trade Talk. It's been a pleasure bringing it to you. Do stay tuned. Lots more coming up over the course of the day. And this is BQ Prime.